Hello everyone, welcome back to my YouTube channel. In the last class, we learned about trading account and profit and loss account, right? So, we will prepare the trading account in order to find out the gross profit or gross loss. And profit and loss account that we will prepare in order to find out net profit or net loss, right? So, in trading account, we need to enter opening stock, purchases and all direct expenses, and on the credit side we need to enter sales and closing stock, and in the profit and loss account we need to enter indirect expenses in the debit side and indirect incomes in the credit side, right? So today we are going to solve one practical problem under trading and profit and loss account. Let's start it. See here, from the following balance of Mr. Ram, prepare trading and profit and loss account for the year ended 31st March 2024. So here opening stock is 40,000, purchases rupees 1,60,000, sales 2,50,000, return inwards rupees 5,000, return outwards 3,000, wages 20,000, carriage inwards 6,000, salaries 18,000, rent 10,000, office expenses 4,000, dividend on investment, this is an indirect income, that is rupees 2,000, closing stock 55,000, outstanding wages 2,000 and rent prepaid 1,000. Clear? So let's start it. First, what we have to write down? First, we need to write down trading and profit and loss account for the year ended, that is 31st March 2024, right? Are you able to see, right? So this is the trading and profit and loss account. So write down particulars amount, debit side, credit side. First, in the trading account, what we need to write down? We need to write down opening stock. So our opening stock, how much? That is rupees 40,000. So write down to opening stock rupees 40,000. After that, we need to write down the purchases. So two purchases, how much? That is rupees 1,60,000, right? But see the problem very carefully. There is return outwards, means it means what? Return outwards means that is nothing but purchase return. Return outwards, how much it's there? That is rupees 3,000. Clear? Return outwards, it means what? It means goods returned by us to the supplier. For example, assume this trading and profit and loss account that is related to Mr. Ram, right? So here Mr. Ram, he is returning the goods to the supplier. Clear? That is due to damage or poor quality. Clear? So what we have to do? We deduct return outwards from purchases, because those goods are no longer our purchases, because we are going to return that goods to the supplier. Mr. Ram, he is going to, means he has already returned the goods to the supplier because of due to damage or poor quality. Clear? So we need to, so our two purchases, we have purchased 1,60,000 amounts of goods, but here Mr. Ram, he is going to return, he has already returned the goods of amounted to rupees 3,000. So only rupees 1,57,000, that is our purchases now. Clear? I hope this is clear to you all. After that, what we have to do? We need to write down the, we have to go to the credit side and write down the sales amount. Clear? All revenue or incomes that will come under in the credit side. So by sales, how much? That is rupees 2,50,000. 2,50,000. See here. Sales 2,50,000. Clear? Now, if there is any returns, we need to deduct from the sales. See here. Return inwards, return outwards means purchase return. Return inwards means sales return. Clear? Return inwards, how much? That is rupees 5,000. So return inwards, it means what? It means goods returned by the customers to Mr. Ram after sale. Clear? Return outwards means goods returned by Mr. Ram to the supplier, and return inward means goods returned by the customers to Mr. Ram after sale. So it is also called as sales returns. Now, why do we deduct return inwards from sales? Because those sales are not final sales. We did not earn income from returned goods, right? So we will not receive money for them. So they will not remain as sold. So if we do not deduct return inwards, what happens? Sales will be overstated. Means that is rupees 2,50,000. And profit will be also overstated. Here gross profit, right? That will also overstated. So that's why we have to deduct the sales return. So listen these points very carefully. Clear? Return outwards and return inwards. So 2,50,000, from 2,50,000 we need to deduct return inwards or sales returns, that is rupees 5,000. So amounted to rupees 2,45,000. Clear? Now in the trading account, next what we have to do, we have to enter all the direct expenses in the debit side of the trading account. Clear? This is the trading account. Clear? So direct expenses means what? Expenses that are directly related in the producing or purchasing of goods. Right? So see here, opening stock done, purchases done, sales done, return inwards, return outwards also done. Now next one, it is wages. So these are done. Now wages. What about wages? Here wages is, that is rupees 20,000. Now wages, we have to decide whether it is a direct expense or indirect expense. So wages means what? Wages are paid to the workers who are directly involved in producing goods. So wages are a direct expenses. Wages are different, salaries are different. Wages that are paid to the workers who are directly involved in producing the goods, but salary that is paid to the staff. Clear? So they are indirect expenses, means they are not directly involved in the producing goods. But wages, they are paid to the workers who are directly involved in producing goods. Clear? So all the direct expenses we need to enter in trading account. So write down 2 wages, that is rupees 20,000. Now see here, after entering the wages, we have to check if there is any outstanding wages. See here, outstanding wages, how much? That is rupees 2,000. Now outstanding wages, it means what? It means wages that are due but not yet paid. Clear? Even though they are not paid in cash, the work has already been done during the current year. So the expenses belongs to this year. Clear? So that is why we add outstanding wages to wages to show the correct cost of goods. Clear? Even though they are not paid in cash, the work has already been done during the current year, means these outstanding wages that are belongs to these are the expenses belongs to this year only this year. So we have to add these outstanding wages that shows the correct cost of goods. Clear? So add here outstanding wages, that is rupees 2,000. So totally wages amounted rupees 22,000. Clear? Now here outstanding wages is over. Now next one is carriage inwards. How much? That is rupees 6,000. Now carriage inward, it is a direct expenses, means it is the transportation cost paid to bring goods into the business. So it is the expense incurred for bringing purchased goods from the From whom? From the supplier's place to our business premises. That is what? Carriage inward. So it is a direct expenses. So write down to carriage inward how much? 6,000. So carriage inward 6,000, that is also over. Now salaries, it is an indirect expense. Rent also, office expenses also, dividend on investment, that is an indirect income. Now closing stock. Write down in the credit side. Clear? Write down on the credit side of the trading account. See, by closing stock, how much? That is rupees 55,000. So why closing stock is entered in trading account? Because closing stock entered in the trading account because it helps us to find out the correct cost of goods sold and gross profit. Clear? So here trading account is over. Now we have to see whether it is gross profit or gross loss. Here it is totally amounted to rupees 3 lakh. Means here debit side means expenses, they are less than incomes or revenue. So that will result into gross profit. Means that is rupees 75,000, that is our gross profit carried on. Clear? Now here we can find out the cost of goods sold also. So what is the formula of cost of goods sold? Plus purchases plus direct expenses minus closing stock, right? In the last class we learned, right? Opening stock how much? That is rupees 40,000 and purchases 1,57,000. Add direct expenses, wages and carriage inward minus closing stock how much? That is rupees 55,000, means rupees 1,70,000, that is our cost of goods sold. Now next what we have to do? We have to prepare the profit and loss account. Clear? So our two gross profit how much? 75,000. Means expenses, they are lower than the incomes. So gross profit is rupees 75,000. Now we need to brought down the gross profit to profit and loss account. So by gross profit brought down how much? That is rupees 75,000. In profit and loss account, we have to record all the indirect expenses debit side and indirect incomes credit side. Clear? Now see here, salaries, that is rupees 18,000. So salary, it is an indirect expense because salary paid to office staff or managers, clerks, administrative employees. Clear? Means they do not work directly on producing the goods. Clear? That's why we need to debit, means under profit and loss account only indirect expenses will come, right? So write down two salaries 18,000. Now next one is rent, that is rupees 10,000. So to rent how much? That is rupees 10,000. But here see the problem, here rent prepaid rupees 1,000 is there, right? So first we will see about the rent. Rent means what? It is an indirect expenses. Means rent that is paid for office, shop or go down. Clear? So it helps the business to run smoothly. Clear? But it is not directly related to producing or purchasing goods. Clear? That is what rent. Now prepaid rent. Prepaid rent means what? Rent paid in advance for next accounting period. Not current year. The rent that is paid in advance for next accounting period. Means it does not belong to the current year. That's why we need to deduct the prepaid rent. Clear? Now why prepaid rent deducted from rent? Because of the matching concept. You have already learned this one, right? Only the rent relating to current year should be charged as an expense. Means here our rent is 10,000. It is inclusive of rent prepaid, that is 1,000. Clear? Now so that you need to deduct rupees 1,000 from 10,000. That will result into rupees 9,000. Clear? I hope this is clear to you all. Now next one, it is office expenses. How much? That is rupees 4,000. Office expenses, it is also an direct expense because it includes the items like stationery, electricity, telephone, internet, postage. Clear? So these expenses help in running the office. but not directly related with buying or producing goods. Clear? So write down office expenses, rent done, salaries done, office expenses, that is rupees 4,000. So write down 4,000. Now I think all indirect expenses are over. Now indirect incomes, that is dividend on investment. Dividend on investment, it is an indirect income. Right? Write down rupees 2,000. So dividend, it means what? Dividend is income earned from investment, not from the main business activity. That is what? Indirect income. If the income that is related to main business activity, then it will not included in the profit and loss account. The income not from the main business activity of buying and selling of goods or producing services, only that items will be included in the profit and loss account. See here, dividend, that is income earned from the investment. Clear? Not from the main business activity. So write down by dividend on investment how much, that is rupees 2,000. Clear? Now here also, now we have to check whether it is net profit or net loss. See here, incomes, indirect incomes are more, 77,000, and these indirect expenses are less, means it will result into net profit, that is rupees 46,000. That is transferred to capital account, means in the balance sheet we need to mention this net profit. Clear? That one we will see in the upcoming classes. So this is about trading and profit and loss account. So in trading account is prepared to find out the gross profit or gross loss and cost of goods sold. So the formula of cost of goods sold is opening stock plus purchases plus direct expenses minus closing stock. Clear? And in the credit side of the trading account, sales will come, and if there is any return we need to deduct it, and we have to write down the closing stock. After that, next we have to prepare the profit and loss account. We here in this case we have to brought down the gross profit, and we need to enter indirect expenses. In trading account only direct expenses, here indirect expenses and indirect incomes. On the credit side we need to enter the indirect income, that is not from the main business activity of buying and selling of goods or providing services. Clear? That will result into net profit or net loss. In our case it is net profit. Clear? So I hope this problem is very much clear to you all. If you have any doubts in this class or in this problem, please leave a comment. Thank you.